issues ahead. One of the biggest, if not the biggest, budget speech. Of course, that's tomorrow. Today, we're looking at tax. Government has been spending more than it earns for years, which has led South Africa deeper into debt. Now, to ensure that we avoid a credit rating downgrade, debt will have to be contained. But there are many spending priorities: education, housing, infrastructure development. So where will the money come from? Will taxes have to go up? Let's look at some of the options tonight. Now, personal income tax is one revenue source. South Africa has a progressive tax system where higher income earners pay relatively more. The idea is that the rich pay more to help feed the poor. Some have been calling for a bigger so-called wealth tax. If you look at the upper echelon, here we represent their tax rate. It was fixed at 40% for years. There you can see for years and years it went up to 41% last year. The problem is the personal tax base, the people who qualify to pay tax, are pretty small and they're carrying large swaths of the economy. Now, the corporate tax rate is at a record low of 28%. There you can see it's come down and it's relatively really low. A higher tax rate could be a deterrent to businesses investing in South Africa, which is what we desperately want to attract. But as you can see, it's been relatively low for a while, so Pravin Gordhan, the minister, may consider going there. Now let's look at VAT. The bets are actually on that finally we could see an increase in value added tax, or VAT. It's 14%. It's been there for a while. You can see the problem is if you hit VAT, you hit the poor, who spend a larger percentage of their salaries in the stores. Basically, that's where you see VAT added to everything. However, there are ways around this, such as zero-rated essential goods, such as bread. Some are saying we can increase the number of those zero-rated objects, services and goods. Old Mutual says a 1% increase in the VAT will give the state 20 billion rand. Now, sin taxes on alcohol and cigarettes inevitably go up. The other options are capital gains taxes, dividend taxes, excise taxes, estate duty taxes. It will be hard to raise any taxes in an election year. Many would prefer government to rather slash unnecessary expenditure and deal with inefficiencies. But the expectation is that there could be a range of cuts as well as tax hikes, various interventions to deal with the situation that this country finds itself in.